Hey guys, Seeney here. Thank you so much for tuning into another video on the Australian Wealth channel. And today we're going to be talking about why you need to buy assets now. Okay, so this is a topic that I think is going to be really important for most people, regardless of where you are. If you're not making too much money, if you're sort of making an average amount of money, or you're making a lot of money, I think this is going to be a really important video. So in this video, I'm not going to be telling you what to buy specifically. I'm just going to be explaining why assets have a lot of value and why it's a good idea potentially to buy them. Now, I'm not a financial advisor, and this is not financial advice. You obviously need to make your own decisions when it comes to your own investing. So I just want to show you guys a chart very quickly on this video. Now, what you'll see is that the rise of the top 20% of income earners continues to go up, whereas some of the other quartiles remain roughly the same. Now, why is this? Is it because these people continue to earn more money? Yeah, maybe that could be one of the answers, but I think the main answer is the fact that these people continue to buy assets. Now, what is an asset? An asset is something that continues to appreciate in value or pays you money every single month, every single week. Assets are the things that we should all be striving for. You know, there's many different types of examples of assets, such as an investment property, could be a stock, could be a dividend stock, it could be a business that continues to produce money for you. There's a number of different things that you could class as an asset. So the reason the top 20% of income earners and net worth holders continue to make more and more money is because they continue to buy assets which get them further ahead. There's only so much that income can do, but when you start to leverage that income and buy assets, then it grows that income even faster. If you're expecting your savings accounts to deliver on your financial goals, think again. The interest rates that you get on putting your money in the bank is ridiculous. It is just so low that it's a joke. And I personally believe it's not really even worth doing unless you get a decent rate on a term deposit, something above like 2.5% at least. And even then, you're barely keeping up with inflation. So the top 20% continue to get more and more wealthy because of this purchasing of assets. And this is why a lot of people can be seen to be left behind. So if you want to continue to grow with the rest of the world, then it's really important to do what those financially savvy people are doing, and that is generally buying assets. I mean, have a look at what Jeff Bezos has done with Amazon. They're always looking to acquire new companies and grow in new directions. And I think you should be looking to operate your life in a similar kind of ways, to be looking for opportunities to continue to invest and then grow your net worth. There's a great saying from Warren Buffett which says, time in the market is much more important than timing the market. And I think there's a lot of value in that. If you're spending 50 years investing in the stock market, you're very much likely to get a better return if you're investing in index funds than investing for 5. So the best time to buy assets was probably 10 years ago, but if not, today. Now, another reason that I think it's really important to be looking at buying assets in this particular time is the fact that inflation is very likely going to be running a lot hotter. Now, what inflation is basically is the devaluation of money over time. If you go back and you look to, say, the 60s or 70s, you might have seen a catalog where they were selling clothes or selling some bread from a supermarket in the catalog. What you might have seen is that the prices are insanely low. You know, like 10 cents for a loaf of bread. You know, you want to get some clothes, it might be a few dollars. And things have changed very drastically. Now, the reason for that is inflation. See, as we go through time, the reserve banks around the world want to have inflation at roughly 2%, because what that does is it encourages people to invest. If the value of their money is going to go down over time, for most people, they're going to want to be investing that so that they can actually put that to use, and they're not going to be losing value and going backwards over time. So a 2% target for inflation is actually quite good for the economy. Imagine if it went the other way and your money became worth more as time went on, then you'd be much more inclined to hold on to it, which is not so great for consumer spending and growing the economy. So having an inflation target of 2% is much better for the economy. Now the thing is, because there's been so much money printed because of the current illness that's going around the globe, then what that means is that there's going to be a lot more money in circulation, which means over time there's going to be a lot more inflation. The value of that money, because there's so much more in the system, is going to be going down in value. Now, a lot of assets are adjusted for inflation. If inflation goes up, the value of that asset is going to correlate with that. But if you're holding cash, it's not going to be the case. So for your money to keep the value that it currently has, you're likely best off to be keeping it in assets, which is what I tend to do. Now, it's really important to keep some cash around to take advantage of opportunities as they appear in the stock market or a real estate deal, something like that. But it's really important also to be investing so that your money isn't losing value every single year. Now, the final reason that I want to talk about when it comes to why it's a great idea to be always buying assets and buying them now is that you can generate passive income, which is going to snowball for you. So looking at things like an investment property, if you have the capital to do that, or dividend paying stocks is a great way to be getting that snowball happening so that you're making more and more money on top of your income. So some examples of dividend paying stocks would be something like AT&T, which pay roughly a 7% dividend. So what that means is if you put $1,000 into that stock, then you're going to be getting paid about $70 in dividends every single year. So over time, as you continue to invest, that dividend is going to ratchet up. Let's say that over time you manage to put $1 million in AT&T stock. That's going to mean that you're getting paid $70,000 every single year. And what this does, it allows you to take the burden off yourself a little bit from constantly having to work to owning assets where you can actually get paid for owning them. And the more you can get invested, then this is going to snowball and it's going to get easier and rack up to bigger and bigger amounts. Like take $1 million, let's go from there, that's $70,000 in dividend income. Let's say that over time you manage to accrue over $10 million worth of stock in AT&T. That's going to be $700,000 every single year. So you can see how it's really easy over time to reinvest that money and start to make more and more. So let's say you have $10 million and you get your dividend, your $700,000, and then you invest that in AT&T. That's going to be a lot of money just off that reinvestment that you're going to make. I think it's roughly $50,000, $60,000 in that year. So this is why the top 20% of income earners continue to get ahead. It's because of assets. So the best thing I would suggest, which I do myself, is to look at buying assets. Now, obviously you need to be very careful when you're doing this because you don't want to be buying crap assets. And that's why I don't provide recommendations on this channel. You know, we might have a look at a stock every now and then, but I think it's really important to do your own research and see what's going to be a great fit for you. So thank you guys so much for watching this video. I hope you found some value in it. Please make sure you hit the like button and subscribe to the channel so we can get this as big as the Meet Kevin channel. Or, dare I say, the Graham Stephan channel. Love talking about finance, so thank you guys for tuning in and hanging out. We'll see you later.